Good evening, everyone, students. You would be able to hear in the background the sound of firecrackers. So we are in the Diwali week, and maybe in school classes you will have such background effects. So that's the fun of being in a cultural country life of India, where we keep on celebrating, enjoying so many festivals, belonging to so many different culture, belonging to so many different geographical areas. And every such celebration has a different charm of its own. So let us all be part of it, celebrate it, and yes, let us be focused on our goals. Let us be committed to our career goals, and let us honor the priority and pride of our family members, especially our parents, our teachers, and let us make all of our friends and everyone proud. So, with this, let us go to the next topic for revision, which is one of my favorites, that is exemption. Now, as we all know, what is exemption? Exemption is basically a way of giving a relaxation from payment of tax. Interestingly, if you see the arrangement of chapters, you find that section 9, 10, 11, all these sections fall under the heading of levy. So somewhere the law has equated exemption with the levy of tax. Now, what is interesting is where the lawmaker does not want to tax something like alcoholic liquor for human consumption, ENA, or even today petroleum products. The simplest way of doing that is keeping it outside the charging section. However, there is a difference when it comes to exemption. Exemptions or exempt supplies are those which are very well part of the charging section. So on these transactions, GST is leviable, but because of exemption, GST is not payable. So that is what is the difference. Interestingly, secondly, when we say these are all covered in levy, so what is the impact? The impact is that for all these transactions which are covered in levy, which are exempted, are very much within the scope of GST, and hence all the compliances like taking registration, like preparing records, accounting, all are equally applicable. Yes, section 23 has given a relaxation whereby if you are engaged wholly and exclusively in exempt supplies, then you are given relaxation from registration. But otherwise, if you have even 1 rupee of taxable supply and all other supplies are exempt, still you will be required to get registered if you fit in any of the registration provisions, the limits if you cross. Secondly, you will have to maintain records and even you have to issue invoices which are called as bill of supply for the exempt transactions. So this is what is the impact. This is what is the implication. Secondly, what is interesting to notice, the exemption which is right now under the GST law by way of a notification is the prerogative of the executive government. So section 9, that is levy, is the power of the legislature. The executive government has no power on levy. It is always the parliament, and in case of GST, on recommendation of the GST council. So you can say both authorities together are the law creators. However, When it comes to exemption has been delegated by the legislature, by the parliament to the executive government. But again, this also has to be on the basis of recommendation of the GST Council. So no exemption can be given without the recommendation, or I should say without the approval of the GST Council. But the difference is that when we talk about exemptions will flow from the government by making amendments in the original exemption notification. Now, how do government get this power? So government gets this power through Section 11 of CGST SGST Acts and Section 6 of the IGST Act. So these are the sections which empowers the government to give exemption. Now, how do these sections empower the government? So it provides two mechanisms to the government. One is either by way of a notification, or the other is by way of a special order. Now, what is the difference? So the government can exempt either by issuing a notification or by issuing a special order. Obviously, both after only the council has recommended so. Now, the difference is that exemption via special order will be resorted to only when the government has to give an exceptional exemption. What do we mean by exceptional? So, exceptional means one is where the exemption is generic, applicable to public at large. Anybody can be eligible for that exemption if you fit into the conditions, definitions of the exemption entries. Those are on the left side, that is by way of notification. But where the exemption has to be given to one-off scenarios, to one specific case, that may not be extended to others. That is what is by way of a special order, and that is what is exceptional nature. So this is what is the major difference between a regular exemption and exemption by a special order. Now, when it comes to the generic exemptions, which is by way of issuing a notification, this section 11 empowers the government to exempt generally. So these are generic exemptions. One, either absolutely or either conditionally. Now, what is an absolute exemption? What is a conditional exemption? So conditional exemption is the one where it is within your control and power to decide whether or not to take the exemption. How? The exemption comes with some criterion, conditions to be fulfilled. If you do not fulfill the criterion condition, automatically you will be out of the exemption. So those are conditional exemptions. Whereas when it comes to absolute exemption, absolute are what? Absolute are, if you are a healthcare service provider, you are not given any choice to exempt or not exempt your healthcare services. The moment your service fits in the definition of healthcare, it is absolutely exempt. These are absolute exemptions. So majority of the exemptions that we study are absolute. What is very important is the provision says that absolute exemptions are also compulsory. Means what? Once the law has provided absolute exemption, you do not have a choice to decide whether or not to avail the exemption. You have to compulsorily go for the exemption. So this is what is very important about absolute exemptions. Now, recently, after section 11, another section was introduced in the form of 11A, and in case of IGST 6A. Now, what is 11A and 6A dealing with? Now, section 11 gives you an exemption notification whereby wherever the government feels that some supplies of goods or supplies of services have to be given relaxation, they will put it in the exemption notification. However, this 11A is for a very specific scenario. What is that specific scenario? The specific scenario is that there is some non-levy short levy of tax on any goods or service, and such non-levy short levy is on the basis of a generally prevalent industry practice. Means what? Where the industry is following a certain understanding or interpretation of the law, whereby they are not paying tax. Why? Because they believe it is exempt, they believe it is non-taxable, or they are paying tax at a lower rate. So let us say the correct rate is 18, but the industry in general is paying at 5. Now, there are so many scenarios, so many such situations in the GST law, where since GST being a new law, GST being a amalgamation of VAT and service tax and excise, there were many things where in general the industry had a different interpretation. I'll give you an example. So when we go to ice cream parlors and we purchase an ice cream, the question is whether it will be supply of goods, that is supply of ice cream, sale of ice cream, or it will be provision of a restaurant service. Why? Because the ice cream, which is a food article, is served to you. Now, in general, in majority of the ice cream parlors across India, the understanding was that it is a supply of service and it is a restaurant. Now, this particular understanding was later on rebutted by the council by giving a clarification that no, in case of ice cream parlors, the ice cream should be treated as supply of goods and 18% GST should be applicable. However, in general, people were following 5%. Exceptional situations may be there, but in general, they were classifying it not as supply of ice cream goods, but as supply of restaurant service. Now, this resulted into short levy. Now, such scenarios would be covered in 11A6A, whereby the government is empowered again by way of a notification. So they can issue notification exempting उस plug में ये charger लगा. So they have power to issue a notification whereby they can exempt the difference. So what is difference? So in this scenario, instead of 18, you paid 5. Okay, now clarification has come that 18 is correct rate. But what will happen for the past? So 11A can be useful in this, where by way of a notification, the government may notify and exempt these services from payment of GST of the differential amount. Similarly, let us say relating to industrial spirit or that ENA, there was a lot of confusion. People believe that ENA should also be or is also liquor or alcohol, and obviously it is outside GST. So as a general industry practice, people were not paying GST. Again, it was recently clarified, and now in fact it is part of the charging section itself, where the charging itself excludes ENA or rectified spirits from levy of GST. But what about the past cases? Again, in such scenario, 11A can be applied so that whatever tax people have not paid as a result of general industry practice, such tax the government has power to, you can say, waive. So government using 11A or 6A will be eligible to waive off such taxes either in full or in part. Only condition to be satisfied is that it should be proven that there was a general practice of either not paying or paying lower tax on that particular supply. So this is what is 11A and 6A. Now, under section 11 and under section 6, the government is empowered to issue notification to grant exemption. So we have one list of exemption for goods, which is originally 2 bar 2017. Now after 22nd September, it is replaced by 10 bar 2025, both of simple tax rate. However, our syllabus does not cover that list. Our syllabus covers the list of exemption for services, which still remains the original one. There is no replacement. So it is still 12 bar 2017 under the CTR and 9 bar 2017 under the ITR. ITR is Integrated Tax Rate Notification. Yes, there are some exemptions like health insurance, general insurance, which have been exempted from 22nd of September, but those exemptions have been incorporated in the original notification. So as far as exempted services is concerned, the exemption continues to be under the original notification. Fine. Our syllabus basically covers list of exempted services and not exempted goods. So now we'll be discussing or revising the list. But before I go to that, if anybody has any doubts, queries, you may please put across. First, I'll take up your doubts, queries, and then we'll go to the revision of the exempted services. Yes, students, any questions? Yes, students, any questions from anyone relating to any of the topics? Yes, if somebody wants to speak, I can unmute them. You can raise your hand, I'll unmute you. Anybody, students? Okay. If there are no queries, we proceed. Now, first, very important exemption is exemption for charitable and religious activities. Now, let us try to draw parallel with income tax. Under income tax law, the old income tax law, the new one will be applicable from the next year, but the old Income Tax Act 1961, that act also provides exemption for charitable institutions, wide section 11, 12, 13. Now, when you read these sections, you have an understanding that in case of income tax law, if a trust is registered as a charitable trust, then in general, any activity done by them which is of general public utility can be exempted to them, obviously fulfilling the different conditions, compliances over there. So what is important to notice, under income tax law, there is no rigid list. Yes, they have identified few services, but that is not the only service which is exempt, because there is a generic clause called as general public utility activities. However, when you come to income tax, there is a very strict, very limited list of services which are exempted, and hence it is very important for us to draw this distinction. Yes, there is one thing which is common between the income tax law and the GST law is that in order that you get this exemption, the entity should be registered as per section 12AA or 12AB of the Income Tax Act. So, in order that you get the exemption for this charitable activities, you have to be first registered as a charitable trust, and the registration section and the registration provisions are same as that of income tax law. This is the only similarity. But what is exempt is very different between income tax law and the GST law. Now, what is exempt under the GST law? So first is where the service is by way of conduct of any religious ceremony. What is this? So generally in our families, Indian families, you will find that as I started today, we have multiple cultural and religious activities going on, whereby we require the person who is acknowledged by our religious books as the learned person, who may be a father of a church, who may be a priest, who may be a Maulvi, who may be a Panditji, to perform some religious ceremony. And again, the religious ceremony is the one which is prescribed by our books, our religious books. Now, this person who is performing these religious ceremonies for us, and whatever dakshina, whatever fees we are paying to this religious person, that fees is what is exempt. So what is the first exemption? Now, important is for this, this person need not be registered as a charitable trust or charitable trust. The remaining uh, activities are covered. So this first exemption is to a person, to an individual who is performing the various religious pujas, the various religious uh, different types of ceremonies that are prescribed by our religious texts. So whatever is the fees paid to them is what is exempted. Next is where you are a religious trust, firstly registered at 12AA AB or 2023C subclause V of the Income Tax Act 1961, and you are giving the presence of your place to general public. So what are presents? Presents means the boundaries. So we will find that many of these masjids, many of these churches, many of these mandirs, many of the gurudwaras have a huge premises which is part of that particular religious place. So under the religious place, not only the temple or the mosque or the church or the gurudwara, but there is lot of space around it. And many times these spaces have various establishments like accommodation rooms, like maybe places for eating, etc. So these places, in fact, many of these have lawns and even big community hall where various religious ceremonies can be conducted. So many of these religious places, they give these premises on rent. The rent of these premises is exempted from GST if it is up to a certain limit. What is that? Where you are hiring this as a accommodation. So the accommodation rooms where the rent is not exceeding 1,000 per day, that will be exempt. But where the rent is 1,000 or more, it will be taxable. Secondly, where community halls are given, the rent should be less than 10,000. If it is 10,000 or more per day, it will be taxable. And where shops are given on rent, then the rent, if it is 10,000 or more per month, that will be taxable. So first two cases for accommodation rooms and for community halls, the criteria is per day rent. But for shops, which is obviously given on monthly basis, the criteria is monthly rent. Next, there are specific organizations. These are generally, you can say, created by the government, like the KMVN or the Hajj Committee, which helps people to go on religious pilgrimage. Now, the fees which are charged by these committees for performing the religious pilgrimage of Hajj or of Kailas Mansarovar Yatra, the fees is exempt. Next is where any training or coaching is given in sports by a charitable trust, which is again registered under 12AA or AB, is what is exempt. Now, what is this? So, we have various cricket academies, we have various football, volleyball academies and clubs where the interested students are trained in those sports. Now, if these are private academies, they are taxable. But if these are run as a trust and the trust is registered at 12AA, you'll find that wherever you are staying, you'll find many of these academies being there. And many of these academies are private, but at the same time, many are registered and run as a trust. So whatever fees they are charging for training or coaching in any sport, that will be exempt, provided it is done by a charitable entity. Now, in this one, also one more entry is covered, which is not part of charitable, but since it is under the same entry, so where any individual is teaching you, is training you in any art or cultural form, like any dance form, like any music, but condition is it should be form of art or culture. Like if you are trying to learn how to play sitar, that is part of this. If you are trying to learn or training, taking coaching of Bharatnatyam, Kuchipudi dance, all these are covered here. The fees for such training or coaching is exempt. So these were the charitable trust related services. Again, this word is very important, that is charitable activities. There is a detailed definition of what is charitable activities. That is not covered here, but that you can refer from the main part of the book. Next comes agriculture related services. Now, please bear in mind, students, that whenever we say agriculture, what comes in front of our eyes are the goods. Like what comes in front of your eyes is wheat, rice, or different types of grains or vegetables. All these are goods. This is the exemption list for services. So here we are not talking about whether rice is exempt or whether growing of flowers and selling of flowers is exempt or selling of trees is exempt or selling of mangoes is exempt. We are not talking about that here because that is part of good schedule. Here we are talking about services which are having linkage with agriculture, or you can even say these agricultural produce. But here again, specific services are exempt. Not all services relating to agriculture is exempt. Again, this is the very important list because in exam, if you have any question relating to exemption, definitely you can have one or two pointers from agriculture section. Now, what all specific services relating to agriculture are exempt? First, loading, unloading, packing, storing, warehousing. Now, all these are, you can say, allied and support services. So once agricultural output is produced, it is harvest is done, it is cut. After that, you perform all these services. Now, all these services are not exempt for any item of agricultural produce. In the first entry, it is exempt only for one item, which is rice. Yes, you'll find similar services given further, but they are for again specific items. So first is for rice. Next, for minor forest produce, only one allied service is exempt, that is warehousing. Now see, there are two forest produce, major and minor. In major, all the wood will be covered. In minor, the plant, the leaves, the fruits, these are all covered. That is what is minor forest produce. Next, again, the services of storage or warehousing is exempt. Now for what? Now it is for cereals, pulses, fruits, vegetables. So again, these are all agriculture related products. For these specific products, only storage is exempt. For rice, loading, unloading, packing, storage, everything is exempt. But for these items, only the storage or warehousing is exempt. Next, artificial insemination. So wherever you are doing reproduction of your livestock artificially, that is what is exempt except for horses. Next, wherever any part of the agricultural process is outsourced in the form of a job work, where somebody else is performing this particular work. So let us say after growing of my produce, I need to clean it. Now, generally, cleaning should be done by the farmer itself, but nowadays we have so many business models where some part of my agricultural process I'm getting it done from outsider on job work basis. So wherever any such intermediate process relating to agriculture or relating to agricultural produce is being done on job work basis, that is what is exempt. Then certain specified services relating to agriculture are exempt. What are they? First, agricultural operations. So first, performing the agricultural operations is exempt. So what are agricultural operations? They have further clarified. So these are those activities which have a direct relation with production of the agricultural produce. So let us say for farming, I give you a contract. So whatever will be my contract charges paid to you will be exempt under this entry, because what you will be doing on contract basis for me, you will be doing cultivation, harvesting, threshing, etc. So all these which are directly connected with agricultural operations is what is the first item. Then if for carrying out your agricultural operations, you require labor, and I am a manpower supply agency. So what I am doing is I am only providing you labor who will be working on the farm. So for this, the manpower supply agency charges are exempt. Next, where any of the operations which are essential for your agricultural produce and they are carried out at agricultural farms. So again, this is the outsourcing type of work. So where you are getting any part of your agricultural operation done from somebody. So let us say you hire me, I come to your place, I bring my equipments using which I do the entire cleaning of your output. I remove the waste part or the unnecessary part of your agricultural produce so that I make it marketable. So all these activities, when you are getting it done by an outside agency, that is what is exam. Next, you require agro machinery, mainly the tractor or the machines which do cutting, cleaning of the agricultural produce. If you're taking them on rent, the rent is exempt. Or if you're taking the agriculture land itself on rent, whatever rent you pay for the agriculture land, that is also exempt. Then against these allied activities of loading, unloading, packing, all these activities were covered above for rice. Here they are covered in general for any agricultural produce. So rice was covered. Here all other agricultural produces are covered. Next, agricultural extension services. So agricultural extension includes all those services which helps in consolidating, augmenting the agricultural function. Next, for selling your product, you take the product to the market, which is APMC market, where at one common place, all the prospective buyers or the agents they come and they purchase the goods. So mainly farmers of a particular area of a particular district bring their entire produce at that particular place, which is called as APMC. Now this APMC charges you some fees. Only then you are allowed the entry in their place, and there you are allowed to sell your produce from there. That fees is what is exempt. Then the agents whom you hire and to whom you pay the agency commission, that is also exempt. So these are some of the exempted services relating to agriculture. So Gita has a pointer. Yes, Gita, you're right. So Gita says these services are exempt for warehousing facilities provided by a person and not by agriculturists. Correct. So you're right. So wherever we are reading that agriculture related warehousing storage is exempt, here the agriculturist is not having the warehouse. In fact, agriculturist is using the warehouse of some other person. So let us say I have built warehouses where you are, let us say, a farmer or an agriculturist, and you are keeping your produce in my warehouse for its safekeeping. The warehousing charges which I am charging to you is what is exempt. So here the warehouse is not run by the agriculturist. That is not a condition. If an agriculturist is also having a warehouse which the agriculturist is giving to outsiders, that is also exempt. But here it is not a requirement that the agriculturist only should be running the warehouse. Then comes education services. Now in education, both sides are exempt, the outward service of education and few inward services. But for this, what is important is this point. Now see students, you have to identify these things very, very minutely. If you see the above list, whatever we studied up till now, charitable agriculture, over there, what is important is, like in case of charitable, two things important. The service provider should be a registered trust under 12AA or 12AB, and also the services or the activities. Whereas when we read agricultural services, over there only one thing is required, that is the service. Here in education, what is the service? Now I'm talking about the outward service, is not specified. But who should be the service provider is what is specified. So as you can see, when we talk about the outward service, that is services which are provided by, so these are the outward services. It may be any service. So here the name of the service is not specified. So here this exemption is service provider specific. So who is service provider is what is the important point and not what is the service. Now who should be service provider? A service provider is over here termed as an educational institution. Now, who is educational institution? That is defined. First, it is a school from pre-primary up to standard 12th. Second, it is a college which is offering degree. So it will be from 12th standard onwards. So it will be your junior college, senior college, etc. And third is vocational training institutes. Now, in all these three, what is important is all these three are termed as educational institutions, but there is some interesting difference. First, when you talk about schools, which is up to standard 12, the board is immaterial. So it may be a CBSE board, SSC board, ICSE board, or IGC board, that is international boards. All are exempt or all are eligible for exemption up to standard 12. So up to standard 12 fees, even of an international board, that is a school running international curriculum, is exempt because they are covered in the definition of educational institution. However, when we talk about colleges, that is after standard 12, 12th is called as HSC. So after HSC, whatever are the degree colleges, over there it is a precondition that these degrees are recognized by laws of India. So if you are doing or if you are going for a foreign degree course, the fees of that foreign degree is not exempt. Let us say a foreign university starts its education in India and it is offering foreign courses and foreign degrees. Post standard 12, whatever is the fees is not exempt because these foreign degree colleges or foreign universities are not fitting in the definition of educational institution. This is important. And when it comes to vocational, it should be such a institute which is obviously recognized by central or state government for running the vocational course. Now, importantly, any service which this educational institution is providing to the students, to the faculty, that is a teaching staff, or to the other non-teaching staff, that is accountants, or peons or other housekeeping and maintenance. So all these services provided to the students or the faculty or the staff by the educational institution is exempt. Here the name is not specified, so it is not necessary that the nature of service should be education. So nature of service can be anything. So if the school is tomorrow taking you for a trip and charging fees for the trip, that is also exempt. If the school is providing any extracurricular activity which may not be part of education, still that is also exempt. So what is important on the outward side is name or nature of service has no relevance. Only the condition is it should be service provider who should be education institution. First is any service given to the students. Then comes the second part where for getting admission in these educational institutions, many times you have to give an entrance test. Now, the fees charged for this entrance test is charged by these education institutions to public at large, and they are right now not my students. On the basis of this exam and their interviews and other formalities, I will decide whom to give admission. So, out of let us say 10 lakh students appearing my entrance exam, I will give admission only to 200 because that is only the number of seats I have. But 10 lakh students have paid me the entrance fees. So their entrance fees is also exempt by way of this second entry. Then comes the inward services. That is the services received by these educational institutions. Now, when we talk about inward services, all are not exempt to all the three. So we have three types of educational institutions from preschool up to 12th, the first category, then post 12, that is for the degree colleges, the junior, senior colleges, and third, vocational training. Now, these three education institutions, when we talk about the inward service, that is the services which they are receiving, the exemption is not for all services to all three. Now, who is having exemption for what? That is what we need to see from here. So first, services provided to the education institution. What type of services? Transportation of students. So the bus facility that many times schools provide. The catering. Nowadays, many schools have the catering facilities whereby the students are given food within the school itself, and the security, cleaning, housekeeping services. All these three services, these are exempt when these services are consumed or where these are inward services for such an educational institution which is engaged in preschool education, that is up to standard 12. So it is applicable only where the first educational institution is taking the service. So this exemption of inward service is applicable to the first category, that is up to pre-primary, from pre-primary up to standard 12. Then comes the second service. Second service is services relating to conduct of admissions, exams, etc. Then it is exempted, or it is allowed as exemption, where the recipient of this particular service is who? The recipient of this particular service is colleges. That is the second category. Then supply of online education, journals, periodicals. This exemption is applicable to institution providing services by way of education at a part of curriculum for obtaining qualification. So this is again the services which is exempt for colleges. So here, depending upon what is the inward service, the exemption is allowed. So we have to be clear as to we are talking about which inward service. Not all inward services are exempt to all the three. So there is a selective category. Then comes the medical related services or the healthcare services. Now in healthcare, two things are important. One, the provider is important. The provider should be a hospital or its equivalent, which is called as clinical establishment, or it should be a doctor or its equivalent, or it should be a paramedic or its equivalent. So the service provider should be any one of the three, and the service should be a healthcare service. When both the conditions are satisfied, then only the exemption will apply. Now, what is the definition of healthcare? If you remember, the definition of healthcare services is where the service is by way of either investigation, that is diagnosis, or either treatment, or either after treatment, the care. So these three are coming in healthcare. First, the investigation, which we call as diagnosis, the testing and all, then the actual treatment, and third is the care. So what you do after post-treatment, that is when you go to OPD for getting a follow-up checkup, or if some operation has happened, the dressing done, all these are care. Now, when these services are provided in any of the recognized systems of medicine, what are the recognized systems of medicines? They are Ayush, AAYUSH, and there is one more alphabet N which is silent. So double A, first A is allopathy, another A is Ayurveda. Y is yoga, U is Unani, S is Siddha, H is homeopathy. That is Ayush, and N is naturopathy. So when treatment, care, diagnosis is done, and it is done in any of these recognized systems of medicine, that is what is coming in healthcare. However, there is an exception over there. What is the exception? Any type of plastic surgery, cosmetic surgery, or hair transplant, which is done only for beautification, that is taxable. But where again these services, hair transplant, cosmetic surgery, these are done for restoring the anatomy of the body. Why? Because there was some accident, there was some trauma, because of which you had baldness, because of which you had some skin problem. And to correct that, this plastic surgery, cosmetic surgery, or hair transplant is done, then it is exempt. But where it is done only for beautification, that is what is taxable. Now, within healthcare, when you get admitted to a hospital for some treatment, so everything which is charged by the hospital is a composite supply of healthcare service. So not only the treatment charges, but the room charges, the nursing staff charges, the food charges, if some clothes are given, the charges for that, the cleanliness charges, everything which is charged in the bill, everything is exempt. However, now there is an amendment which says that if the room charges which are levied to you is exceeding rupees 5,000 per day, then that will be taxable. So within healthcare, the room charges where they are exceeding rupees 5,000 per day, that will be taxable. Again, in that, there is a carve out where the room charges are exceeding 5,000, which I just said will be taxable. However, there is a carve out, there is an exception which says that if you are admitted to any of these type of rooms like ICU, CCU, ICCU, and ICU. So for these rooms, anyways, the charges are very high because that much care is taken. You have multiple equipments to be used in these rooms. So over there, even if the charges are exceeding 5,000, it will remain exempt. But for any other room other than these type of rooms, where the charges are exceeding 5,000 per day, those charges will be taxable. Remaining other healthcare charges will remain exempt. Similarly, any services by way of transportation of patient in the ambulance by any person other than the above. So if hospitals are transporting anyways, it is exempt. But if there is a private agency which is transporting the patient through ambulance, that is also exempt. Next is, besides human, the healthcare services for animals and birds in the veterinary clinics is also exempt. Then comes services which are provided by government. Now, when we talk about services provided by government, what we have to understand and remember is the logic of the exemption of services provided by government is that where the government is performing any function, which is the sovereign function, and there is any charge, that is exempt. Second, where the government is providing services or facilities to common public, that is also exempt. What is taxable is where the government is providing services to large business units. Who are large business units? If you remember the previous class, even in the RCM list, I had mentioned this, that where the business entity is having a turnover which makes them liable for registration under GST, they are large business units. So where the government is providing services to large business units and the value of service exceeds 5,000, that is what is taxable, and majorly that is taxable under RCM. So both things are equally applicable, the RCM also and the exemption also. Now let us read the list in detail. So what all things are exempt? Where the service is provided by governmental authority, how? By way of any activity which is a function entrusted to municipality or panchayat by the constitution. And how the constitution has given them these functions? It has entrusted these functions by way of two articles, 243W, 243G. When you read these two articles, you find a list of functions which these panchayats or municipalities have to perform, which we experience daily. Like early morning, you'll find road cleaning happening. You have a drainage facility. You have a facility of somebody coming and collecting your daily household waste. All these are the functions given in these lists. Now, when these services are provided by a government authority, they are all exempt. Second, any service by the central government, state government, union territory, or local authority, all these are exempt except the following. In other words, these are the taxable services. What are they? First, services by the post, services by the Ministry of Railways, then services in relation to aircraft and vessel, services of transportation of passengers. These are the services which are not given the exemption. And after that, any services other than specified above provided to business entities. These are also taxable. So besides the above three provided to even individuals is taxable. And besides above, any services provided to business entity. And then you'll find the business entity should be a large business entity. That will come in the next point. All these are exempt. Now, as per the above entry, services by post is taxable. However, within that, there is a carve out. What is the carve out? What is exempt? Following services of post are exempt: the postcard charges, the inland letter charges, the book post charges, and any ordinary post where the weight is less than 10 grams. So all these services provided by the post department is exempt. But if you are going for a speed post service, you are going for RPAD service, or you are going for regular post, but where the weight is exceeding 10 grams, that is what is taxable. Next, services provided by all these government, central, state, etc. to a business entity with an aggregate turnover of such amount in the preceding years as as it's make it eligible for exemption from registration. So this is what is the point where I was mentioning earlier, that where the services are provided to small business entity, that is also exempt. In other words, what is taxable? Where the government is providing services to large business entities. Who are large business entities? Whose turnover cross the exemption limit of 20 lakhs, 40 lakhs. So if you are a large business entity, then services provided by government to you will be taxable. However, this exemption is not applicable to specified services and renting of immovable properties. Specified services and renting of immovable properties in any case is always always taxable. Now, services provided by central government, etc., to another central government, state government. So, in short, one government entity providing services to another will be exempt. However, above ABC will be taxable. See, these ABC are specified services. These remain taxable always. We are talking about exemption for other than these. Then, if you remember, I had mentioned this, where the government is providing services to large business entity, there is also an amount capping. The amount should exceed 5,000, only then it will be taxable. Why? Because if the value of the service is up to 5,000, it is specifically exempt. Again, this 5,000 benefit is not for specified service. Specified are always taxable. Where the service is a continuous supply of service, how this 5,000 limit has to be checked, because a continuous supply of service may run over multiple years. So 5,000 is per year limit. So if per year limit is up to 5,000, it will be exempt. Then this one is important, where the government is running a old age home. And here again, another entity is covered, that is the charitable entities who are registered under section 12AA or AB of the Income Tax Act. If they are running an old age home where the persons who are resident aged 60 years or above, so this is what is the senior citizen definition of Income Tax Act, and the amount charged by these entities is not exceeding 25,000 per month per person. So if their per month charges charged to these residents is not exceeding 25,000, then they are also eligible for exemption. However, if their charges exceed 25,000, they will become taxable. Next, following services of Ministry of Railways is exempt. So above we saw the list which says Ministry of Railways always taxable because they are into specified services. However, within Ministry of Railways, following services are always exempt. First, when we go to railway for receiving some of our guests, we buy a platform ticket. Value or the sale price of platform ticket is exempt. Next, facility of waiting rooms. So at times you have some nominal charge for using the waiting rooms, that is exempt. Then similarly, there is a clock room where you can keep your luggage if you want to go out and do your work and come back. Those are exempt. And nowadays you'll find that in major stations, you are given that battery operated car, which will take you from one platform to another or drop you outside. The charges for the battery operated car is also exempt. So these four are the services of railways which will always be exempt. Remaining are not that relevant, so I'm just skipping them. Next, again within this category, services provided by the central government, state government, etc., by way of registration. So where you have to take registration and you pay some charges for registration. And these registrations are the registrations which are made compulsory under any law. Like in order to run factory, you have to take registration under the Factories Act. For starting a company, you have to pay the fees for getting your company registered. All these fees are exempt. Secondly, where you have to take a certificate of testing, calibration, safety check relating to protection of your workers, consumer, publics, including fire licenses. Again, the value or the fees charged for these certificate, these licenses is exempt. For example, you want to run a restaurant. Now, after some tragedies, which if you remember had happened a couple of years back, now some strict guidelines have come for coaching classes, strict guidelines have come for restaurant, where they need to take these licenses or certificates. Only then they can run that business. The fees charged by the government departments for providing those licenses is what is exempt. Next, we get these things from the government, that is we get a passport, a visa, driving license, birth and death certificates. for some charge, that is again exempted. Next, where the government is charging you some penalty. Why? Because you did a breach of any of the contracts, which is over here called as toleration of non-performance. So in simple words, it is breach of the contract. So many times we have some contracts with governments, or you take some subsidy in backward area, but it comes with some conditions, some post compliances. Now, if you do not meet those compliances, you are required to pay some penalties, some fines. These penalty fines charged by the government is exempt. Next, we come to the next category, that is construction service. Here, where pure labor contracts are done. So you are hiring a labor contractor where there is no material involved. The contractor is a pure labor contractor, means he's only charging for services. What services? Construction, erection, commissioning, etc., etc. And what are these construction commissioning related to? It is related to the work of beneficiary-led individual house construction under the Housing for All mission. So we all know that government has presently this particular one of the most ambitious schemes of providing house to all. Under this scheme, wherever you are hiring a labor contractor who will be constructing your house, the charges paid to them for pure labor charges, that is only for services, no goods, that is what is exempt. Then services supplied by electricity distribution utilities. What are they? So let us say you are having a farmland and you want the electricity company to provide you electricity connection up to your farmland so that you can run the tube well. So where the farmer requires tube well to be run on his farm, he requires electricity for which he has to pay the charges to the electricity companies who will then do erection, commissioning, etc. So that all poles are installed so that the electricity can come to your farm. The charges levied by the electricity company for giving you this facility of bringing the electricity pole or the DP up to your farm, that is what is exempt. Second, where you are getting your single residential unit constructed like a bungalow or a row house, not a flat in a building, but a bungalow or a row house. And again, you are hiring a labor contractor, the labor contract charges are exempt. Similarly, supply of TDR or FSI of a land by a landowner to the developer is exempt where it is relating to residential flats. Next, wherever you are doing traveling. So whenever we talk about passenger transport, first, passenger transport by air in economy class is taxable. I repeat my words. Air travel is taxable. Business class is always taxable. Economy is always taxable. However, to promote certain specified states tourism, they have said that if you are traveling to one of these states, like Arunachal Pradesh, Assam, Manipur, etc., then the air charges only of the economy class will be exempt. Over there, business class is still taxable. Second, where you are regularly traveling, now this is maybe by road, and you are hiring a non-AC contract carriage other than a radio taxi. So radio taxi is Ola, Uber. So other than that, where you are hiring a non-AC, anything, bus, taxi, rickshaw, all these are exempt, provided it should not be for tourism purposes or for any chartered tour. Next, where you take the local bus, which charges you for a particular seat, which is called as stage carriage. Again, it should be a non-AC bus, non-AC taxi, non-AC rickshaw. That is what is exempt. Next, railway tickets. Where you are traveling by railway, the railway tickets are also exempt, provided that it is not a first class or a AC class. So in railways, the first and AC class is taxable to GST. The other classes of railway tickets, which includes the general coach or the sleeper coach, is exempt. Similarly, the tickets of metros, monorails, tramways is exempt. Further, if you are traveling by water, so the inland waterways ticket is exempt. And wherever you are using public transport, except where they are used or the purpose is tourism, then it is exempt. Again, what type of public transport you are using? Vessels. Vessels means ships. Next, metered cabs, that is taxis, auto rickshaws, including e-rickshaws, all these are exempt. However, for this metered cabs and auto rickshaws, if these services are supplied through ECO, that is Ola, Uber, that is not exempt. So Ola, Uber, and radio taxis are always taxable. Next, for goods transport, the rule is service by way of transportation of goods by road is exempt. So first rule is goods transport by road is exempt except from a GTA. So where you are getting your goods transported via GTA, that is goods transport agency, or by a courier agency, that is taxable. Other than these two, other goods transport is exempt. Similarly, where you are getting your goods transported by inland waterways, it is exempt. Next, where you are getting your goods transported by GTA, we just saw GTA is taxable. However, if you are getting following things transported by GTA, that is exempt. Further, if you are getting it transported by railways or even by ship, so any of these goods transported by railways or by ship or by GTA, that is all routes are covered except air. So all other transports are covered. So following goods transport is always exempt by any medium. These are taxable only where the medium is air. So what are these goods for which the transport charges are always exempt? Agricultural produce, milk, salt, food grains, organic manure, newspapers or magazines which are registered. Next, delivery of defense or military equipments and relief materials which are sent wherever there is some natural calamity, etc. Only transport of these goods by any medium is exempt. Yes, these goods, if transported by air, will be taxable. Next, where GTA is providing their services to unregistered persons, that will be exempt. However, if it is providing to any of these persons, it will be taxable. And if you remember the RCM list, where the GTA is providing their GTA service to any of these persons, it will be taxable. And the option of GTA, option of RCM, FCM is given to the GTA. So GTA has to decide whether it wants to be under FCM or RCM. Next, where the services of GTA is provided to government departments, local authorities or government agencies who have taken registration only for the purpose of TDS. So they are not having any outward supply, but they took registration only for the purpose of complying with the TDS requirements. That GTA service to such entities is exempt. Next, where you are getting interest on deposits, loans, or advance. Now, these may be with banks or these may be with private persons. All interest will be exempt where it is on any type of deposits or loans or advances. However, the exception is where the interest is for credit card, that is what is taxable. All other interest which is charged by banks or even by private persons for any of these three things, it is exempt. Next, where you are getting foreign currency exchange from banks or from money changer, it is taxable. I repeat, where you are getting foreign currency exchange from a bank or from a money changer, it is taxable. However, where the banks change this currency between themselves. So one bank is getting his exchange from another bank, or a bank is getting it exchange from a money changer, or one money changer is getting it exchange from another money changer. So between them, wherever there is money change from one currency to another, that is exempt. But where they are doing the same service with the businessmen, it is taxable. Next, when you swipe a debit card, credit card, so whenever you do shopping, nowadays, this is very common, especially on online also. You make payment through debit card, credit card. These services have some charge levied by the bank, who is your acquiring bank. So the bank who will be doing this collection on your behalf. So let us say you are a shopkeeper. The customer is swiping the credit card and making payment to you. Now your bank, which is providing you this credit card swiping service, will be collecting your payment on your behalf from the customer's bank. So your bank charges you some transaction fee. That transaction fee is exempted from GST if the value of transaction is up to 2000. Not the fees, but the value of transaction. So if your one swipe is up to 2000, the bank charges on that is exempted from GST. Then different types of life insurances are exempt. Now, anyways, post 22nd September, all the personal life insurances, all the personal health insurances are exempt. But before 22nd of September, which is applicable to our January exams, only specified life and health insurances are exempt. So these are the list of those life insurances, or these are the list of those general insurances which are exempt. Then there are specified bodies or entities, the services of which are exempt, like ESIC, EPFO. We know all these entities. So all these entities, when they are charging any fees to their members, that is what is exempt. Then services of business facilitators. Now, who are business facilitators or business correspondents? They are like agents. Now, many times banks or insurance companies, they want to establish their business in some backward area, in some rural area. So how do that? They appoint such business facilitators who will be working on behalf of the bank or the insurance company, those backward area, to establish the bank or to establish the banking business. So whatever commission the bank is paying to such business facilitators or correspondents is what is exempt. Now, above we saw the list where government was providing services to you, which was exempt. Now it is the other way around. Now it is the other way around. Now in this, what is exempt is where you as a private person, maybe individual, company, firm, is providing services to government. Now you are providing services to whom? To central government, state government, union territory, local authority, governmental agency, or governmental entity. You are providing services to anyone. Again, what are these services? These are services in relation to functions which are entrusted to municipality. So I'll give you example. So I just explained you the same points where the government was providing the service. What service? Daily, you have the uh, vehicle coming to your doorstep for collecting the daily garbage. So it is the garbage collection service. Now that service government is providing to you, but how government is providing to you? At the back end, the government is taking those services from me. So I have filled in the tender, I have got the tender whereby I will be providing this service to the government and government is giving this service to you. So what government is giving to you was exempt above in services given by government. Here what is exempt is when I am charging the fee to government, what service I am giving to government is also exempt. Condition is it should be a service which is specified in these articles. Secondly, it should be pure service, that is no goods are involved. However, now they have made small, you can say concession, where goods are involved, the value of goods should not be more than 25% of total value of the service. So either it should be a pure service, zero goods, or where some goods are used, the component of goods should not exceed 25% of total services. Second, what else is exempt? Where again I am providing services to government authority in relation to water supply, public health, sanitation, solid waste, etc. Again, what is this? See, same thing. These are actually services provided by government to you. They are already exempt above. But how do government provide this? Now, no government is having its own vehicles or its own employees. Everything is outsourced by government by way of tendering. So I am the person who has backed the tender for this. So I provide these services to government. I charge to the government for all these activities which I am doing. So I am that contractor who is doing these services and government is making payment to me. That is what is exempt here. Then where you have these ration shops, which are the fair price shops. So the person who is running these ration shops, he is getting some commission from the government for running these shops. So the service is provided by the shopkeeper to the government by way of running a ration shop or a fair price shop. These services, that is the commission, is exempt. Next, where I am providing services to government of what? Under any training program for which 75% or more of that fees is borne by the government. So government is running this particular scheme, Sarva Saksharta Abhiyan, or the skill development, Kaushal Vikas Yojana. Under that, the government is providing free training to multiple people, or whatever is the fees, the government says that government will pay 80%, 90%, you have to pay only 10%. Now, under all these schemes, You join a particular training academy. Let us say you want to learn GST, you come to my training academy, and I'm training you or making you a GST consultant or a GST practitioner. And this is one of the courses which is under the government's skill development program. So once I register you under the government skill development programs portal, whatever is my fees, 90% government will pay. You have to only pay the initial 10%. So such fees, what I'm getting from government is what is exempt. Next, leasing service. Now, whenever you want to run a factory, what you do is you go to your city's industrial zone, industrial area. Over there, you take a land on lease. Now, this lease is given to you by some government body. So, like in Maharashtra, we have the MIDC, Maharashtra Industrial Development Corporation. In Gujarat, we have GIDC. In northern part, we have that NRIDC something. In Rajasthan, we have the RICO. All these are these state government bodies which are given the responsibility of running that industrial zone, whereby they provide the plot of land on lease to various industries. Now, where I'm taking the lease from these government bodies and the lease period is of 30 years or more, they charge me an upfront lease premium. This lease premium is fully exempt from GST. But what is important is this is exempt only when it is charged by government to me. So let us say I have taken the plot on 99 years lease. I have run the lease for 30 years. Now for remaining 69 years, if I'm passing on this lease to you, it is not covered in this exemption, right? Then legal services. Now this we saw in the RCM list also, where the services is provided by arbitral tribunal or by advocates to whom? To any individual who is not a business entity or to a small business entity or to government, all this is exempt. So what was covered in RCM? Where arbitral tribunal is providing services to large business entities or a lawyer is providing services to large business entity, that was covered in RCM because that is the only service which is taxable. Where they are giving to non-business entities or to small business entities, that is what is exempt. Next, sponsorship of sporting events which are under one of these banners. That is, if they are covered in any of these categories, then the sponsorship to such events is exempt. Similarly, where we are providing services relating to what? Skill development. Now, who are we? We are one of these bodies or we are a trainer approved by these bodies. Then whatever is our fees which we charge for the purpose of skill development, that is what is exempt. Then if you are an artist, so you do stage performances. Now, if your stage performance is in some art form, which may include music, dance, theater, but what is important is it should be either a folk form or a classical art form. So if it is some Hollywood, Bollywood art form, and you are performing any music concert, that will not be exempt. So all these uh, renowned singers, when they are performing or they are having these live shows, they are all taxable because they are not performing it in folk or classical art forms. They are doing it in some Bollywood or some Hollywood forms. That is what is fully taxable. Let us say, as an artist, you are playing tabla, you are playing sitar, and you are charging your fees for that live concert of tabla, sitar, harmonium, or you are performing some traditional dance form. Like I always give example of Hema Malini ji, who is a very good dancer of this Kathak. So whenever she performs or she does a stage performance, that is what is covered in this exemption entry. Now, her fees, her performance fees, if it is up to 1,50,000 for that performance, it will be exempt. But if her fees is more than 150, it will be fully taxable. Again, if she is performing this as a brand ambassador, then irrespective of the amount of fees, it will always be taxable. So this is what is important, that if she is performing the capacity as a brand ambassador, irrespective of fees, it will always be taxable. However, where she's not performing as a brand ambassador, then her performance fees up to 150 will be exempt. But if it is more than 150, it will be fully taxable. Next, wherever you are going to a place where there is some entry fee, that will be exempt if the entry fee is for a museum, national park, wildlife sanctuary, tiger reserve, or a zoo, or it is to a protected monument, or it is to any of the following places where the fees is up to 500 per person. So for the following, up to 500 per person is exempt. So it is you are going for a circus, a dance or a theatrical performance, or an award function, a concert, or a musical performance, or a sporting event by a recognized sporting body. All these are exempt up to 500. Beyond 500, it is taxable. Next, this is important. So the society in which you stay, that society charges you some monthly maintenance charges. Now, if this monthly maintenance charges is up to 7,500, it is exempt. But if your housing society is charging you monthly maintenance charges exceeding 7,500, it is taxable. So this exemption is up to 7,500 if the monthly maintenance fees is up to that. Similarly, in this, there is one more category where you are part of some association or body which is doing what? Which is working for the welfare of industrial or agricultural labor, or which is a trade union. Over there, if your annual membership fee is up to 1,000, it is exempt. But if your membership fee, if it is annual membership fee is exceeding 1,000, it will be taxable. And next, sale of business as a going concern is exempt. So these are some important exemption entries. Yes, satellite launch services, these are also exempt. Then toll charges are exempt. Public library fees are exempt. And this is important, yes, where there is a business exhibition which is held outside India. So if let us say I am an organizer of business exhibitions, I conduct a business exhibition outside India, let us say in Tokyo, where you all are exhibitors, you are booking a stall. Whatever charges I am levying to you will be exempt since the business exhibition is held outside India. So these are some major exemption, students. Then there are some minor ones, but these are the major and the most important exemptions. Fine. So this is relating to the exemption chapter. If any of you has any particular query in any of the exemption entries, you may please feel free to ask. Yes, students. Anybody, any query with relation to any of the exemption? So I've covered around 80% of them. In fact, all the major ones I have covered. But if you have any queries relating to any, you may please ask. No? Great. We'll just take a 5 minutes comfort break. After 5 minutes, we'll go to the next topic, which is time of supply. Fine. So just a 5 minutes comfort break. Yes. Now we go to the next topic, which is again an important topic when it comes to exams. Time of supply. Now, students, we have to understand what is time of supply. So, see, time of supply is again an artificial provision, if I can use this word. What is artificial? Artificial is the assumption that the supply has happened on this date. Now, see, what is important about this topic, why this topic is required in the law? Because a transaction of supply may be spread over different tax periods. Generally, a tax period is a month. In few cases, it may be a quarter, but generally it is a month. Now, let us say the best example is, let us say these classes. For the time being, assume that there is a fee for these classes and you have joined these classes. Now, the classes are spanning over 5 months. Now, when the classes are spanning over 5 months, let us say you have paid some fees in advance 1 or 2 months before the starting of the class as advance fees for registering for the class. So, so some may have paid fees in advance, some may be paying at the start of the class, some may be paying over the period of the class, some may be paying at the end of the class. So the transaction, the supply, and the other related aspects of supply, that is payment, may have different dates. As a business, I need to decide out of these dates which date I will deem that the supply has happened so that I will pay the tax on this supply. This is what is determined by the time of supply. So basically, the time of supply is the provision for determining your month in which the GST liability on that particular supply triggers or that has to be discharged. That is the simple meaning of the term time of supply. Now we have two sections determining time of supply, 12 and 13. 12 for supply of goods, 13 for supply of service. 12.1 and 13.1 says that it will be deemed that the time of supply is what is given here, or it will be deemed that the liability to pay tax will be on the time of supply which is given here. So it is deeming that this is the time of supply. Now, in this, you have different subsections dealing with different scenarios. So first is you have subsection 2, which you can say is for forward charge transactions. Then you have subsection 3, which is for reverse charge transactions. Then you have subsection 4, which is time of supply, where you have issued vouchers first. And then you have subsection 5, which is dealing with interest, that is late fees, if the consideration is received late, and you have the residuary provisions. So these are the different subsections dealing with different time of supplies. Now, what is the time of supply in case of forward charge transaction? Now, forward charge, I will divide it into three categories: regular transactions, continuous supply transactions, and special transactions. So these are the three types of transactions within forward charge: regular, continuous, and special. Now we first go to time of supply provision for goods. Now this time of supply provision for goods, what is the time of supply? Please pay attention. The general rule is time of supply is earliest of all the dates. But when we talk about goods and we talk about forward charge of goods, pay attention. We are talking about goods and we are talking about forward charge of goods. The time of supply is having a restricted meaning. What is that restricted meaning? Please understand. Now, when we are talking about time of supply of goods and it is a forward charge, the restricted meaning is we will ignore one date. So there are three dates you have to take earliest. However, for time of supply of goods under forward charge, you will ignore one date, and that is the date of payment. Why you will ignore? Now, interestingly, if you see section 12, which is dealing with time of supply of goods, it is still having reference of this third date, that is the date of payment. However, by way of a notification which was issued in November 2017, that is in the first year of GST itself, they have removed the reference to this date. So as on date, for the purpose of forward charge of goods, you have to only refer to two dates and take earliest of the two dates. Now, what are these two dates? One is the date of supply, the other is the date of invoice. You have to take earliest of these two dates. Or I will just replace what I said. One is the date of supply. I'll replace this by another word, the date on which invoice was supposed to be issued as per section 31. Now, on which date the invoice was supposed to be issued as per section 31? It is the date of supply. So I said date of supply or the date of invoice. Date of invoice means the date on which you have actually prepared the invoice. Now, interestingly, what is the date of supply or the date on which invoice should have been issued? Here we have three scenarios: regular supply, continuous supply of goods, and a special supply of goods. I'll go reverse. What is the special supply of goods? So the special scenario for supply of goods is where the goods are sent on sale or approval basis. Now we all understand what is sale on approval basis. So if you are purchasing a goods, the model is such that I will send you the goods, but that is not the conclusion of supply. So I sending the goods is not supply until and unless you check the goods. Let us say if I have sent some wearing apparel, you will wear it, you will see the fitting, you will see the feel, and once you give me confirmation, only then it is concluded. This is what is goods sent on approval basis. Majority of these online items are having a 7-day, 10-day, 15-day return policy, which is supply on sale or return basis. Now, in case of goods which are sent on sale on return basis or sale or approval basis, what is the date of supply or what is the date by which invoice should have been issued under section 31? The answer is, it is the date on which the buyer, the recipient gives you the confirmation or approval that yes, I have accepted your goods, or 6 months from the date of delivery, whichever is earlier. So if let us say I am sending the goods today. Today is 16th of October. There is no supply today. So first date is not getting triggered. That is, there is no supply today. Supply is not happened. So I need not even issue invoice today. But what will be the date of the supply for this particular dispatch which I have sent today? One, it will be the date on which I get the approval. So let us say I send the goods today. It reaches to you by 25th of October and you give me approval on 5th of November. So 5th of November is the date of sale. That is the first date. Or maximum the law is going to wait for 6 months. 6 months from the date of delivery. So 16th October, from here 6 months is November, December, January, February, March, April. So 16th April, it will be deemed the supply has happened in case my buyer is not giving me the confirmation. So the law waits for 6 months for confirmation. If up to 6 months the buyer does not gives confirmation, then the day when the 6 months is getting expired, that day is deemed to be the date of supply. So whichever is earlier. So if my buyer gives me a confirmation earlier, that date, like in my example, it is 5th of November. So 5th of November is the first day. Then the second day is the date on which I have actually prepared the invoice. Now, interestingly, for goods, I need to prepare the invoice on this day only. So for goods, there is no margin given. Like in customer service, we'll see there is a margin of 30 days, but for goods, there is no margin. So for goods, practically both these dates will be same. But when they will not be same, let us say this date is yet to come. Why? Because approval is yet to be received, or six months are yet to be expired, but I prepare the invoice beforehand. So in that case, the second day may come beforehand, but otherwise, in case of goods, practically both these dates are on the same day. So what is the time of supply? In case of such transactions, it is the earliest of these two dates. And what are these two dates? We are talking about the sale on approval basis transaction. It is the date of approval given by the buyer or end of 6 months from the date of delivery. This is the first date, and the second date is the date of actual invoice. Second transaction, second special transaction in case of forward charge of goods is the transaction of continuous supply of goods. Now, what is this continuous supply of goods? Let us understand. The simplest and the best example is electricity coming to your house. Second is, now in many households, the gas which we require for cooking or even for your geysers and other equipments, the gas is nowadays supplied through pipelines. Now, what is this electricity or gas, how it is being supplied? It is being supplied using some pipeline, using some wire, and it is supplied on a continuous basis. What is continuous basis? You are continuously getting this electricity every moment. You are getting the gas every moment. You have to just switch on. The moment you switch on, you start consuming. The moment you switch off, you don't consume. But the electricity is being supplied continuously. So this is the example of continuous supply of goods. Now this is out of the three, the second transaction. So the first was special transaction, which is goods on sale on approval basis. Second is continuous supply of goods. Now in case of continuous supply of goods, I'll give you another example of continuous supply of goods. Let us say I am a works contractor. I have got a contract for construction of a road. This is a service. Works contract is a service. But for constructing the road, I will regularly require cement and steel. Now, every time I will not go to the cement supplier and say, okay, today give me 500 bags, today give me 20 bags. Instead, I know that I require 5,000 bags of cement for this particular road. And I'm requiring it at a regular interval of, let us say, I will require 100 bags on every alternate day. So what I will do, I'll contract with that cement supplier. Let us say you are the cement supplier. Ki boss, my contract is starting from 1st of November. I will be requiring total 5,000 bags, but how I'll require? I'll require 100 bags on alternate day. Now I will not keep on telling you or reminding you. You make a schedule that every alternate day morning between 9 to 11, I should get those 100 bags delivered to me. This is what is continuous supply of goods, where you as a dealer of cement will keep on sending me the cement by every time using delivery chalak. Now, in all these examples where the goods are coming to me, now firstly there should be a contract. I'm trying to explain you the definition of continuous supply of goods. So there is a contract, and under a contract the goods are being delivered on a periodical basis or on a continuous or a regular basis. That is what is continuous supply of goods. What is important is, when do we conclude the accounting or the amount payable? That date is very important. Now, in case of electricity or in case of gas, there is a meter installed where a meter is continuously recording how much you are consuming the gas or electricity. And then there is a date fixed, or we call it as the cycle, the billing cycle fixed, whereby on the completion of the billing cycle, the supplier company, the electricity company or the gas supply company will generate an invoice. Now, this date is crucial. So this date is the trigger date for time of supply. So again, we required out of two dates because payment is irrelevant. So the two dates are, first, the date on which invoice should be issued. The second, the date on which invoice is actually issued. What is the date on which invoice should be issued? That is given in section 31. And for continuous supply of goods, section 31 says it will be the date on which you have decided to do this accounting or do this computation as to how much goods are supplied. Now, this date may be a month, it may be 15 days, it may be 3 months. That is agreed between the supplier and the buyer. So, like in case of electricity, it is month. In case of gas, it is 2 months. Maybe in case of cement supply, we may decide every 15 days we will do the hisab. That statement of account, here in this definition, they have used the word statement of account. So the date of statement of account, that is the date on which you will make a hisab that, okay, I've been supplying goods to you. Let us now quantify how much goods have been supplied, how much is the amount, so that you can make payment. So that date is the first date, the date of successive accounts. Correct? So in case of continuous supply of goods, what are the two dates? The first date is the date of successive accounts, and the second date is the date of actual invoice, whichever is earlier. Right? Now coming to the third transaction, forward charge of goods. First was special transaction, which is goods on approval. Second was your transaction for continuous supply, and last is regular transaction. Regular means all the normal transactions that we see every day. I go to a shop, I buy the goods, I make payment, transaction close. It is neither approval basis, it is neither continuous supply, it is a regular transaction. For regular transaction, again the two dates are as per 31, the date on which invoice should have been issued, and one is actual date of invoice. What is the date on which invoice should have been issued? It is the date of delivery or dispatch. So in case of regular transaction of supply of goods, the date of delivery or dispatch is the first date. The second date is the actual date of invoice, whichever is earlier is the time of supply. What is important is the third date is not to be seen. The third date is the date of payment, which has been excluded from time of supply of goods for the time being. I hope this is understood and clear to everyone. Now we come to time of supply of service under section 13.2, and again it is forward charge. Again in service also there are three types of transactions: special transaction, continuous supply of service, and regular transaction of service. Now for all these three transactions, we have to see earliest of three dates. First is the date on which invoice should have been issued, the actual invoice, and the date of payment. Here the date of payment has to be seen because here there is no relaxation. Now what is the date of payment? That is also defined in the law. The date of payment is the date of entry in your books of accounts. So as a supplier, you pass entry in your books of accounts. That date of passing the entry, when you have recorded this payment in the books of accounts, or if the payment is credited in your bank, like let us say somebody is making online payment, so the payment is getting credited in your bank. So date of passing the entry, date of recording the payment, whichever is earlier, this is the date which is considered as the date of payment. Correct? Insurance, there is some. Okay. So this is what is the date which will be considered as date of payment. Now, earliest of these three dates is the time of supply in case of service. We go to each transaction one by one. First transaction is the special transaction. What is a special transaction in case of service? It is cessation of service. What is cessation of service, students? So, cessation of service is the transaction where I start supplying a service. Let us say our service is over a period of 6 months, but due to some reason, there is some dispute between the supplier and the recipient, and I decide to stop the service. So let us say you appointed me as your internal auditor. I started your auditing services, but I found that there are some problems, or I'm not comfortable working with your staff, or I'm not getting proper cooperation. I'm not being told or disclose all the proper facts, and I feel somewhere my independence as an auditor is getting affected. So in any of these cases, I decide to withdraw from this assignment. I decide to stop this assignment. This is what is cessation of service. This is common in service sector wherever the work starts, and after starting of work there is some problem in the actual performance of the work. So either mainly it is done by the supplier, or it can also be done by the buyer or the recipient of the service, where the service provision is stopped. That is what is cessation of service. That is what is the special transactions I'm talking about. Now for this transaction, cessation of service, what is the time of supply? Time of supply is earliest of three dates. One is date of payment, one is date of invoice, and one is date on which invoice should have been issued as per 31, which in case of cessation is the date of cessation. So the date on which cessation happens, that date invoice should have been issued, actual date of invoice and date of payment. Out of three, whichever is earlier is the time of supply. Fine, students. Out of these three, whichever happens first is the time of supply. Now, what is important in this is that when we say whichever happens first is the time of supply, so now you have to understand one more thing here. What will be the value of supply? Because let us say this entire contract was for 5 lakhs, but I stopped the work after 1.5 months. So time of supply will be decided earlier of these three, but the question is on what value this particular amount will be calculated. So the answer is, it is the proportionate value of services performed till this date of cessation. So the value will be the proportionate value. So it won't be the entire 5 lakhs. So whatever services I have performed till this date, we have to find out the proportionated value. That value will be taken as the value or the taxable value, and on that value you will have to pay tax on earliest of these three dates. So that is what is the first scenario. Second is continuous supply of service. Now what is continuous supply of service? Similar to continuous supply of goods. Continuous supply of service is where under a contract the supplier will be providing the service on a regular basis, recurring basis, periodical basis. That is what is continuous supply of service. What is the example? First simplest example is our classes. So when we are conducting the regular classes, the LVC, live virtual classes, which is on regular basis, which is, let us say, spread over 6 months. So on 6 months, during the 6 months, we are regularly every day, 2 or 3 subjects are being taught on a regular basis, on a recurring basis. Second example of continuous supply of services, a works contractor. So let us say I have got the contract for constructing a road of 10 kilometers, a highway of 10 kilometers, or I have to construct a dam, or I have to construct or lay the pipeline. All these contracts, which are works contract, where again on daily basis I am performing some part of my total work. So regularly, recurringly, I am providing some service to the recipient. This is what is continuous supply of service. Now, in case of such continuous supply of service, what is the time of supply? Again, the time of supply is earliest of the three dates. The date by which the invoice should have been issued as per 31, actual date of invoice, and the date of receipt of payment, whichever is earlier. Now, out of this, what is section 31 saying? What is the date by which invoice should have been issued? Now, for continuous supply of service, section 31 has given three scenarios. And for each scenario, there is a date by which the invoice should have been issued. What is that date? First scenario. If any due date of payment is specified in the contract, the due date of payment is the date by which invoice should have been issued under 31. So first scenario is where any due date of payment is specified in the contract. Second scenario, Where no date is specified in the contract, it is the actual date of payment. So actual date of payment is the date by which invoice should have been issued. Third scenario, where the services are performed on a step-by-step basis and the payment is linked with the stage of completion. Then every stage of completion with which a payment is linked, that stage of completion is the date by which invoice should have been issued. So as per section 31, these are the three scenarios in which three different dates, depending upon the scenario, will be the date by which section 31 says invoice should have been issued. I'll give you an example of all these three dates. So first is where a due date for payment is fixed. Now again, this happens generally in education sector like classes or like universities where they give you a due date. Ki boss, by this date, you make payment of the fees. So they have given you a date, maybe a monthly date or a bi-monthly date or a quarterly date by which you have to deposit the fees. That date by which you are supposed to deposit the fees is the due date of payment specified in the contract, and that is the date by which invoice should have been issued under section 31. Third scenario which I had explained was where completion of some event is linked with payment. So when I can ask payment when I have completed a particular level of work. So this is generally common in case of construction and works contract. Let us say I am constructing a building, and in my contract I have said that when I complete plinth, you have to pay me 10% of the total value. When I put the first slab, you'll pay extra 10%. When I put the second slab, you'll pay further 10%. So I have linked the payment schedule with the stage of completion of work. So when I have linked the payment with the stage of completion, then what does section 31 says? What is the due date of issuing invoice? It is the date on which I reach that stage of completion. So once I reach the plinth level, 10% is due for payment. So 10% time of supply has triggered. When I complete for first slab, further 10%. When I complete second slab, further 10%. This is what is given in section 31 for the third scenario. That is in case of payment linked to completion. And then the second scenario, which is where no due date is provided and where payment is also not linked with any stage of completion. Then the second scenario comes where nothing is provided for payment. Then the actual date of payment. So that is the date under 31. And what is the time of supply for continuous supply of service? It is the date of 31, actual date of invoice, actual date of payment, whichever is earlier. Then we come to the last scenario in case of forward charge of service. So the first was cessation of service, special scenario, continuous supply of service, and now all remaining, which is the regular scenario. So in case of all remaining services, which is neither cessation, which is neither continuous supply of service, regular scenario of service. So let us say you come to me for some consultancy, I give you consultancy, done. You come to me for this income tax audit or income tax return filing, I do that, done. So it is neither cessation, it is neither continuous supply, it is a one-time service. In such a case, what is the time of supply? Here, they are not saying it is earliest of 3 dates. Here, there are two scenarios given. First scenario, have the supplier issued invoice within 30 days of completion or provision of service? Yes, scenario 1. No, scenario 2. So they have given a 30 days window to the supplier to issue or raise invoice. 30 days from provision of service. Now, in case, let us say I provide service today. Today is 16th of October. So you have to count 30 days from 17th of October onwards. And you have to check if I have raised the invoice within 30 days. Answer is yes. First scenario. If I have raised invoice within 30 days, then earliest of two dates have to be checked. The date on which I have issued the invoice, because it is issued within 30 days, so it is an eligible date, or the date of receipt of payment, whichever is earlier is the time of supply. Second scenario, I issue the invoice after 30 days. Let us say I have issued invoice on 30th of November, which is after 30 days from today. So the invoice which I have issued is not as per the law. So we ignore that invoice. In that case, the time of supply will be decided on the basis of two dates. Date one, date of provision of service, which is today's date, 16th of October. Date of provision or date of payment, whichever is. This is what is time of supply of service for forward charge of services. I hope the first category of time of supply for goods for service under forward charge scenario is clear to everyone. Now here there is a residuary type of provision given which says that when the above events are unascertainable. So we have to take earliest of 3 days in case of service. Now if any of these dates are not ascertainable, when they are not ascertainable, when proper accounts are not prepared or when proper documents for these dates are not available, then the law has provided a way out. It says that the date on which the recipient shows the receipt of service in the books, that will be the time of supply. So this is a way out where any of the above dates are not available. Now, this is what Section 31 has provided because in both cases, supply of goods also and service also, one of the dates is date of 31. That is the date by which invoice should have been issued. Now, here you will find that for service, there is a 30-day window. This 30-day window is extended to 45 days in case of insurance companies, banking companies, NBFCs, etc. Yes. Now we come to the second category of time of supply, which is for reverse charge transaction. Again, 12 for goods, 13 for service, 12(3) for goods, 13(3) for service. Now, what does 12(3) says? It says in case of reverse charge transaction for goods, the time of supply will be earliest of following 3 dates. First, the date on which I have received the goods. Now, see here, the tax is payable by the recipient. So now you are going to look at the transaction from the recipient's perspective. In case of forward charge, tax was payable by the supplier. So you are looking at the transaction from the supplier's perspective. Here, it has to be looked at from the recipient's perspective. So first date is date of receiving the goods. Second date is date of making payment for the goods. And the third date is 31st day from the date of the issue of invoice. Now, don't read it as invoice. You read it as invoice or any other document because there is a possibility that my supplier may be an unregistered person. So he may not be issuing the regular tax invoice. So any document issued by the supplier, a kacha invoice or anything, that is this date. So 31st day from this date. So there are 3 dates given. And here importantly, in case of reverse charge transaction of goods, even the date of payment is important. Forward charge, the date of payment was not important. For reverse charge, date of payment is important. So 3 dates. Receipt of goods, making the payment for goods, and 31st day from the date of invoice by the supplier. Earliest of these 3 dates is my time of supply under reverse charge transaction of goods. Then comes time of supply where it is reverse charge transaction for services. So let us take an example. I'm a company. I have appointed a lawyer and I am taking the lawyer service. Now this is under reverse charge. The company has to pay tax. Second example, I am a company. I have appointed a part-time director or a technical director to whom I am making payment of director's remuneration. This is also under reverse charge. In such cases, the company has to pay tax under RC. What is the date by which the company has to pay tax? The company has to pay tax on earliest of the dates. First is date on which the company has made payment for these services. Next, 61st day from the date of issue of the invoice or document. Again, if my supplier is unregistered, the supplier may not be giving a tax invoice or any document. And then the third date, which is an amendment, which was not there originally, the date of issue of invoice by the recipient. In case where invoice is required to be issued by the recipient, invoice is to be issued within 30 days from the date of receipt of service. So what is this? This is the self invoice. What is self invoice? As per section 31 clause F, wherever the supplier is unregistered and the recipient has to pay tax under RCM. Since the supplier is unregistered, supplier cannot issue a tax invoice. So the recipient has to make invoice on himself. This is what is called as invoice. Now, in this particular case, the self-invoice provisions, that is where the recipient has to raise invoice on himself, was not having a time limit for raising a self-invoice. So this date has been added, which says that the third date is the date of issue of self-invoice by the recipient. And then they have added that the recipient should issue this invoice within 30 days from the date of receiving the service. So this is what is the time of supply in case of reverse charge transaction. Again, the same carve out is given where any of the above dates are not ascertainable. The time of supply shall be the date of entry of books of accounts in the books of the recipient of the supply. Similarly, again in reverse charge for service, one possibility is import of service from your associated enterprise. So where you are receiving service from your associated enterprise or your related person who is sitting outside, there is a possibility that there will be no payment possibility. In such cases, what will be time of supply? It will be the date of entry in the books of accounts of the recipient, or if a payment is made, payment whichever is earlier. Now, what is important over here is since we are associated enterprise, that is companies under the same management, or we are two branches of the same entity, there is a possibility that we may not even issue invoice. Why? Because internally we keep on giving and taking services from one another. Hence, they have made a separate provision for time of supply, which says it is the date of entry in the books. So there may not be any invoice, but there will be entry in the books or payment. Generally, this may not be there, but they have just given it, or payment, whichever is earlier. Okay, Swaminathan has a question. Sir, why date of payment not relevant in case of supply of goods to determine time of supply? Yes, Swaminathan, I'll tell you. See, GST law, if you remember, we have discussed this earlier in regular class also, and I think today at the start also I made a reference to this, is an amalgamation of earlier VAT, earlier excise, earlier service tax. Now, if you read or if you by chance know the earlier VAT laws, under earlier VAT laws, whatever was the time of supply, obviously it was not called as time of supply, but whatever was the timing for making payment by the dealers who were registered under VAT laws, there was no provision of whichever is earlier. Means what? Under the earlier VAT laws, the dealers were required to make payment of VAT only when the sale of goods happened. So let us say if a dealer is receiving payment in advance and the dealer has to deliver goods after 15 days or after 1 month, today on the date of receipt of advance, the dealer was not required to pay sales tax or VAT. The dealer was required to pay VAT only after 15 days or 1 month, or only when the dealer was actually selling or supplying the goods. Now, when we shifted to GST, initially GST did what? It just amalgamated all the provisions and tried to make a single law. But when this single law was made, it created a lot of hindrances to traders, lot of hindrances to the supplier of goods. I'm talking about traders only, because these supplier of goods who were earlier under the VAT law, accustomed for a huge period of time, 40, 50 years since the time VAT law is there or sales tax law is there, they were accustomed to pay tax only on sale of goods. In today's language, supply of goods, but not on receiving payment. So if you are saying on supply of goods or receiving payment, whichever is earlier, so what is happening practically is you have to pay GST even when you are receiving advance. So today I have not yet sold the goods. Maybe I'll be selling the goods in the next month because today I'm out of stock. but you have made me payment, you have placed the order, I'm making payment today. If we apply the rule payment or supply whichever is earlier, then today in this current month itself the liability to GST triggers. Now this was not the case in earlier VAT laws or sales tax law. In earlier VAT laws and sales tax law, a dealer of goods was required to pay tax only when the dealer was actually selling or supplying the goods. Hence, since the dealer was not used to making payment of sales tax on advance, it created a lot of challenge. So practically for dealers, that is mainly supplier of goods, this was a new scenario creating a problem. Hence, in order to give them a relaxation, this particular provision out of the 3 days, the date of payment was relaxed by way of that notification. That is the reason, Swaminathan, why the date of payment is not relevant in case of determining time of supply for supply of goods. Perfect. Now we come to the third scenario. The third scenario is where today I am issuing a voucher. Now, what is this scenario? Again, this is one of the common practices. What is the common practice? So let us say I am a mall. I'm a mall, let us say Phoenix Mall. Now, this is a festive season. People are gifting something to their near ones, dear ones, their friends, their colleagues, their business relations. So let us say I want to gift you all something. But the problem is I do not know your taste. I do not know, let us say I want to gift a t-shirt to every one of you all, but I do not know your sizes, your color preferences, your pattern preferences. So what I do is I go to Phoenix Mall. I say that, okay, I want to gift every of my student a t-shirt around rupees 2000. But I don't know their sizes, their preferences, the color preference, etc. So the mall says, no problem. Let us say I have 500 students to gift the t-shirt to. So the mall says, you do one thing, you make payment to me for 500 t-shirts and I'll give you 500 gift vouchers, gift coupons. Any name can be given. I'm happy. So I pay the mall at the rate of 500 into 2000. So the amount I pay to the mall, and the mall issues me 500 gift vouchers. So today I am sort of buying or purchasing the vouchers, or from the mall side, the mall is supplying the vouchers. Now today is 16th of October where mall has received money and it has given me a voucher. But today no supply of goods or service has happened. Now let us say on 5th of November, I hand over the vouchers to you all. When I meet you all, let us say there is some get together organized where I meet every one of you all. So I hand over the vouchers and I wish you all the best of luck. And I also ask you all to buy whatever you like. Now, you all go to this mall on different dates as per your convenience, comfort. Some go on the same day, some go in the month end of November, some go in December, some go in Jan, etc. Now, you all go and buy the t-shirts of your choice, of your preference. This is how the whole transaction is completed. Now, in this whole scenario, there are different dates on which different events are happening. Today, I am buying the vouchers. On 5th November, I am handing over the vouchers. And then from 5th November onwards, up to January, February, you all are actually going and buying the goods or services from the mall. Now, in this particular case, practically, the question or the challenge is when GST has to be discharged on this 2000 rupees for which I have purchased one voucher. Now, the first question is voucher a taxable supply? Answer is no. The voucher which I purchased today is not a taxable supply. Reason being, the vouchers are merely a medium through which you all can go and buy the goods or service of your choice. But the voucher per se is neither goods nor service. In fact, now this has been clarified by the council, and now that has been brought in as a clarification and amendment. And in fact, now very soon after this attempt, this section would also go, because now this has been deleted. But for the purpose of exams, we just need to know what the section is, because it is still applicable today. Now, what is this time of supply? So the question is, today the mall receives 2000, and then from 5th November onwards, you all will actually go and buy the goods or service. So in this case, when is the mall required to discharge GST of this 2000 rupees? That is the value of the voucher. The answer is, it depends upon whether the voucher is a specific voucher or a general voucher. Now, what is the difference? Specific voucher is a voucher where the nature of supply, that is what goods or service will be purchased, what will be the rate of that goods or service, what will be the type of supply, interstate, intrastate, everything is known today. Today is the date when I go and buy the vouchers. If that is known, it is called as a specific supply. If it is a specific supply, the time of supply will happen today itself. That is the date when I go and buy the vouchers, because today the mall wala also knows, the government also knows that in future what will be purchased against these vouchers. It will be only that one item, and the rate of that item, the nature of supply is known. So the government says, in future, whenever students come and buy that t-shirt, but since we know what is the nature of supply, we know the rate, GST has to be paid today. This is the time of supply, where it is a specific voucher for which it is said that what is a specific voucher? They are defining it over here as where the supply or goods or services identifiable today. What is today? Today is the date of issue of the voucher. In that case, today, that is the date of issue of voucher, is the time of supply. However, if this is a generic voucher, what is a generic voucher? I have taken a 2000 rupees voucher where you can go and buy anything from Phoenix Mall. Anything. You can go to the electronics section and buy something from there. You can go to the household section and you can buy something relating to kitchen utensils or something relating to beauty products or anything you can go and buy. In this case, the voucher is a generic voucher. So today, that is the date on which the voucher is sold by the Phoenix Mall, or today when I purchase the voucher, what will be supplied against this voucher is not known. So obviously no tax can be paid today. In such cases, the tax will be collected on the date when you go and buy the goods, that is you go and redeem the voucher. So it will be different dates depending upon who goes and make the purchasing. So in such cases, the time of supply will happen when the vouchers are redeemed. Now, practically, this is always what happens, because practically vouchers are generic vouchers. However, anyways, after this attempt, this section itself has been deleted, so this will not be applicable. Next, there is a residuary clause. What does the residuary clause says? That where for any reason time of supply cannot be determined. Now, mainly this will happen where somebody has concealed the details, somebody is a tax evader, and later on that person is identified in any action taken by the department. Then the time of supply, how it will be determined? In such cases, the time of supply will be determined as one. If returns were to be filed periodically, the due date of each return will be considered as the time of supply. And where no due date, where no returns was supposed to be filed, the date on which the tax was supposed to be paid, this will be considered as time of supply. So this is the residuary clause. And then the last provision in time of supply is where there is any addition in value. How? By way of interest, late fees, etc. So this is, we'll be studying value of supply after this. So in value of supply, you'll find that if somebody makes late payment for the consideration, and along with the late payment, the person has to pay interest penalty. So that interest penalty is not exempt under GST. That interest penalty takes the color of the original sale or original supply of goods or service. Now, this interest penalty is also liable to tax on the same lines as the original supply is liable to tax. But the question is, at the time of original supply, we were not knowing about this interest penalty. This happens in future. So what is the time of supply of this interest penalty? The answer is, the time of supply of this interest penalty is the date on which this interest penalty is actually received. That is the date of time of supply. And then the last point in this chapter is what will happen where a change in rate of tax has happened. This is provided in section 14. So 12 and 13 is the regular time of supply. 14 is the change in rate. Now this is best uh, applicable now because from 22nd of September, majority goods rates have changed. Now in this scenario, this section 14 comes into picture. Now what does section 14 says? Section 14 says for determining whether tax has to be paid at the old rate or the tax has to be paid at the new rate, what you have to check? You have to check simply one thing. Out of these three transactions, if two transactions, that is majority of the transactions are happening before 22nd of September, old rate will apply. But if majority of the transactions are happening after 22nd of September, new rate will apply. So what it says, what are the three transactions? The date on which the actual supplies happen, then the date of invoice, and the date of receipt of payment. Out of these three dates, any two dates, if they are happening before 22nd of September, pay tax at old rate. If out of these three, any two dates are happening after 21st of September, that is from 22nd September onwards, pay the tax at new rate. Now here, again, there is a clarification. As we know, in case of supply of goods by a registered person, GST is to be paid only out of these three on two dates. That is the date of actual supply and the date of invoice. So in such cases, for goods, we will not see the third date. So in case of goods, if the supply of goods happens before the change in rate, you pay tax at the old rate. If the supply of goods happen after change in rate, you pay the tax at new rate. So for goods, you have to see only two dates, but for service, you have to see three dates. So in case of change of tax, like what happened on 22nd of September, what is the rule? See out of these three, two dates for service, and for goods only out of these three you have two dates, so you'll see only two dates. If in case of goods the supply happened before 22nd September, pay tax at old rate. If supply happens after 22nd September, pay tax at new rate. In case of service, out of three, if any two dates before 22nd of September, pay tax at old rate. And if out of these three, any two dates happen after 22nd of September, pay tax at new rate. So students, this is what is the answer for change in rate of tax. Now, Khalid is saying, sir, in case of goods, rate of payment should be ignored, but in case of service, it should be considered. Yes, but beta for RCM, if you remember, even for goods, date of payment has to be considered. So when we are saying date of payment is not to be considered for goods, beta, it is only for forward charge, not for reverse charge. Right, Khalid? Next, Gurram Venkata is saying, sir, in recent rate change, like if invoice issued before change in rate of tax and goods also supplied before change of rate, but debit note issued after rate change, then what will happen? Very good question. So see, if let us say your transaction happened before, like what Gurram is saying, invoice and supply all happened before. But after this 22nd September, I had to raise a debit note or for that matter, credit note. So since the debit note, credit note, which is a new document, an independent document, is issued after 22nd of September, on the debit note, which rate should be applied? The answer is debit note is always going to follow the rate of original supply. So if you are raising a debit note after 21st of September, still the rate to be applied on debit note is always the old rate. No, beta, then software will not allow. That is not a reason. You'll have to change the software for that. And if you are talking about GST returns, they have already amended the GST return software for that. So, see, and please understand, beta, no software can decide what the law should be. The law will decide what the law should be. So, if the software is not allowing, that is not the reason. The debit note will always take the old rate. This is what is clarified also. So there is no doubt we had FAQs issued by the government and the government itself has clarified this. Fine, beta? Perfect. So we again take a break. It is 23. We meet at 8:30 and we go to the next topic, which is value of supply. Let us go to the third topic for the day, that is value of supply. Now, students, value of supply is a section which applies to CGST and it also applies to IGST, because when you see the tax rates, you'll find that in GST, the tax rates are all ad valorem rates. Ad valorem rates means where the rates are expressed as a percentage of value. Now, since the rates are ad valorem rates, hence the valuation becomes the most crucial part. Now, when you see the valuation section, which is provided under section 15, the valuation section is split into three types of values. First is under 15.1, which is transaction value. Then under 15.4, which is where a transaction value fails, so you go to the valuation rules. Then under 15.5, where in specified scenarios, the government is empowered to notify a value. But again, in notification, it says that they will prescribe a value. So effectively, for both subsection 4 and subsection 5, you have to come to valuation rules only. Because when they say in the manner prescribed, it means prescribed by way of rules. So the difference is that under subsection 4, you go to valuation rules. Why? Because you do not satisfy the condition of subsection 1, that is except in transaction value. And under subsection 5, you go to the valuation rules because subsection 5 says that for some notified supplies, the government will say that value will be as prescribed. Now, the flow is you have to first check 15.5, that is whether your suppliers are covered in the notified supplied list. If yes, you have to directly go to the valuation rules for 15.5 notified supply value. If not, you come to 15.1 to check whether you are satisfying the conditions of 15.1. If you are satisfying the conditions of 15.1, your value has to be the transaction value with some adjustments which are provided in subsection 2, subsection 3. If you do not satisfy the conditions of 15.1, then you go to 15.4, where 15.4 takes you to valuation rules. This is how the valuation mechanism works. Now the question is, if your value or if your supply is notified, you are in 15.5. If not, you come and check 15.1. Now, as I said, 15.1 says the value will be transaction value if certain conditions are specified, and if it is if the conditions are uh, satisfied, you take the transaction value. But while taking the transaction value, you have to also apply the adjustments of 15.2 and 15.3. Now, firstly, we have to understand in 15.1, the first thing, what are the conditions when the transaction value can be accepted? And second, what is a transaction value? See, this term, transaction value, is, you can say, derived from the excise law, where the same concept or the same terminology was used. But what is the concept of transaction value? The concept of transaction value is the price at which this present supply or the present transaction has been entered into by a buyer with the seller. So where you are entering into a transaction, you are mutually agreeing for a price for that transaction. That price is the transaction value. Understand this. So transaction value is the value for your supply, first thing, and it is the value which is, now if you remember, we use this word arm's length price or the negotiated price. So it is the price which a supplier and a recipient negotiates. So interestingly, a transaction value is a very subjective and a non-standardized value. Means what? For the same item, for the same goods or for the same service, a supplier may have different values negotiated with different buyers. So depending upon the bargaining power of either of the parties, the price may be different. This is what is the beauty or what is the relevance of transaction value concept. Now, coming to the conditions when transaction value will be accepted as your value. First, condition which is implied in the section 15.1 is there has to be a price. It means if the supply is a free supply, that is a schedule 1 supply, there will be no price, there is no transaction value. You have to by default go to 15.4, that is valuation rules. 2, the buyer and seller are unrelated parties. And 3, price which is mentioned is the only consideration which you are getting. It means there is no secret consideration flowing from the recipient to the supplier. When all these three conditions are fulfilled: 1, there is a price, it is not a free supply, that is, it is not a schedule 1 supply. 2, buyer supplier are independent, they are not related. And 3, price mentioned on the invoice is the only price which the supplier is going to get. There is no secret price, there is no consideration falling indirectly. Then the transaction value mentioned by you is accepted and you can take that as the final value. But when this transaction value is accepted, certain adjustments have to be kept in mind, which are given in 15.2 and 15.3. 15.2 says what has to be added, 15.3 says what has to be subtracted. Now, all these additions which are given in 15.2 are coming with a basic rider, basic condition that these are not already part of the value. If they are already part of the value, then again you will not add it. So these have to be added only if they are not already part of the value. First, any tax other than GST. So if there are any other indirect taxes which are still continued and that is applicable to your goods, first add it, and then on that total value you will charge GST. Then the next is where originally there was some liability of the supplier. So for completing this supply, the supplier was supposed to make some expenses. But because of some last minute adjustment, supplier couldn't make these expenses or payments, and hence on behalf of the supplier, the recipient made the payments. Now generally what will happen where any payment of supplier is made by the recipient will ask the supplier to adjust the price for that payment. It means the price will be reduced. Now, in such a case, if the price is reduced by the supplier, the law says, sorry, you have to add back that amount which originally was the liability or obligation of the supplier. So that amount has to be included. Third, where besides the value of goods or service, the supplier is charging extra. Why it is charging extra? Because the supplier has done something extra in respect of these goods or in respect of these service. Now, what can be this extra thing? Many times the supplier does delivery, supplier does packing, supplier does handling. So these are the extra cost which the supplier is bearing, which the supplier is incurring on behalf of the recipient, and which it is recovering from the recipient by charging it extra. So whatever is the extra amount which the supplier charges and recovers from the recipient, that has also to be included in the price. Then, if the price is reduced, why? Because there is some price linked subsidy and it is provided or it is given by a person other than central or state government. So if let us say there is some private NGO which is giving a subsidy, or there is some local authority which is giving some subsidy, and because of this subsidy, which is a price subsidy, the final price is reduced, the final price is discounted, and this subsidy will be received by the supplier from these bodies, which is not central or state government. Then that subsidy has also to be added, and the price has to be grossed up for giving the effect of subsidy, that is by including the subsidy. This is what is the fourth addition. And last addition is where you make late payment for the transaction. So I was supposed to make payment for your supply today, but I delayed in the payment. Now, since I am delaying, you are asking me to pay extra, which is for the interest or late fee or penalty. Now, this extra which I am going to pay is also part of the value, and GST has to be paid on this interest, fees, penalty at the value or at the rate of original supply. So if original supply is of goods, this interest will be treated as supply of goods. If original supply is renting service, this interest will be treated as renting service, and the rates applicable to the original goods or service shall apply. So these are the 5 items which has to be added if they are not already included in price. What is to be excluded? Here we have to make small correction. It is not 15.2, it is 15.3. What is to be reduced from the supply, only one thing is to be reduced, that is discount. Now in discount, there are two possibilities. First, the discount is given at the time of supply. Means on the face of the invoice itself, the discount is reduced. The law says we will also reduce it. Means you don't have to pay GST on the invoice, so on the discount portion. But there is a small challenge where the discount is given later. Now, these discounts which are given later are called as post-supply discount or incentives. Now, why these are given later? Because the supplier gave you some target, some quantum, and only when you achieve that target or quantum, the supplier will pass on this discount. So these are called as post-supply discount. Now, the law says we will reduce this also. How this will be reduced? Obviously, the supplier will give a credit note, and through credit note, the discount will be adjusted. But for this, the conditions are there has to be a pre-agreement between the supplier and buyer. That is the advance, that is the discount will be given is pre-agreed by way of an agreement. Second, there has to be a document to identify this, which is the credit note. And third, the recipient should proportionately reverse the ITC. Since the supplier is reducing the GST liability, the recipient should reverse it. Now we come to valuation rules, which are applied because of 15.4. What is 15.4? 15.4 is if you do not satisfy any one condition of 15.1, that is accepting the transaction value, then the value to be determined is as per valuation rule. Now, what are the valuation rules? First is rule 27. When it applies, it applies whenever the consideration is not wholly in money. So this applies one when there is no consideration, or the consideration is not in monetary form, it is in kind, or it is in the form of some other supply. In such cases, the valuation rule says you will take the following value in sequence. The first preference is open market value. What is open market value? Open market value is I have sold a particular commodity to you. The transaction value of that commodity is not acceptable. So, how to find out the value of this commodity? You will see whether I am selling the same commodity to other buyers where their transaction value is accepted. If yes, then whatever is the transaction value at which I am selling the commodity to other buyers, the same commodity, is what is the open market value which you will take as the value for your commodity. So open market value is the price at which I am selling the same goods, the same service to other buyers, which is acceptable. Let us say there is no open market value. Then the second method of valuation is you have paid me some consideration which is in money and some consideration which is in kind. So how to find out value? You take the money which is known plus you find out the fair market value of what is given in non-monetary form. So let us say you are given 10,000 in monetary form and you have given me gold of 10 grams. So find out the 10 grams gold value at 10,000. This is the value as per valuation rule 2. If this also is not possible, the third valuation rule says, now go to the market and find out the fair market price of this goods or service. How do you find out fair market price? My competitors who are dealing in the same goods or same service, what they are charging. So you have to find out those prices which my competitors are charging, which is called as values of supplies of like kind or quality. And if that also fails, then the final method is that you have to apply rule 30 or 31. What is rule 30 and 31? So rule 30 and 31 are the residuary rules. These rules say that one rule say that you do costing, and in costing you find out the cost of that goods or service, and to that you add 10%. The other rule says that you apply logic, you apply the above provisions in a manner that you are able to find out the value. So rule 30 says cost plus 10%. Rule 31 does not provide any mechanism. It says you find out value in a best possible manner considering the generic provisions which you study in this entire section. Next, rule 28 deals with where the supply is between my other branches which are under the same pan, that is distinct person, or I am having transactions with my related persons except agent, because for agent you have rule 29. How the value will be determined over here? First is you take open market value. If that is not available, you take the value which is the fair market value that is charged by my competitors. And if that also is not available, you go to the costing method, that is rule 30, where you take cost plus 10%, or you go to 31, which is the best judgment value. In this, I've been given some options. First option is where I am selling goods to my related person and they are further selling goods in open market. Then what I can do is, instead of taking above values, I can simply take 90% of the price which my which my related person to whom I have sold is further selling in the open market to unrelated customer. So I am selling to my related party and they are selling further in open market. So the price at which they are selling in open market, take that price and make 90% of that price. That is your value. Next, if my buyer, that is my related person or my distinct person to whom I have sold these goods services, is eligible for full ITC, then no valuation required. Whatever I am charging in the invoice, let us say I'm charging rupee 1, that will assume to be open market value and that will be accepted. Then comes rules 29, which deals with where I am supplying to my agents. Where I am supplying through my agents, the value will be first option open market value, or if my agent is further selling in the market, whatever price my agent is charging, take 90% of that price. That will be the value. If not, then take fair market value. If not, go by rule 30 and 31. So basically, you find that all these rules are saying similar things with slight variation. What is rule 30? I already explained. You have to find out cost. In case of goods, it will be cost of production acquisition. In case of service, it will be cost of provision of service, and take 110% of that. What is rule 31? It is the best judgment. It says nothing. It simply says value shall be determined using some appropriate approach or method. Now, you have some specified rules for some specified items. This is because of section 15.5. Because 15.5 says for certain notified values, value will be as prescribed. So these are those values. First is rule 31A. In case of dealer in lottery or wherever there is a chance to win in betting, gambling, horse racing, etc. What is the value? If the lottery is organized by state government, the value is simply the face value, that is the price printed on the lottery ticket, divided by 128 multiplied by 100. So this will be the taxable value if if the lottery is run by state government. If the lottery is not run by state government, then simply the value is 100% of the face value. So whatever is the value printed on the lottery, that will be considered as the taxable value. Next, in case of online money gaming, what is the value? The value is the amount which the player has deposited with the online gaming company. So generally, when you are playing an online money game, you have to deposit some money in the wallet, and that wallet can be used for putting the bet in the games. Once you deposit money in the wallet, the amount which you have deposited, whether or not you use it for playing the game, that amount will be considered as value. In fact, further, it has given a clarification. Even if later on you withdraw any amount from the wallet, why? Because you did not use it, that will not be reduced. It means whatever you deposited in the wallet, that is assumed, that is deemed to be the taxable value, and GST will be charged on that. Next, similarly, where you go to casino, in casino, for playing any game, you have to purchase some token or chips for playing the game. Now, whatever amount you have paid for purchasing that token or chip so that you can participate in any game, that amount is considered as the taxable value. Even though after playing all the games, if some chips are left, even if you're returning it back, there is no reduction for that. The taxable value is the original price of purchase of token or chips. Next, whenever foreign currency is getting exchanged, how is the valuation done? There are two options given. Option one, you can take the difference between the selling rate and the buying rate, which is given by the RBI. So difference in this rate multiplied by the number of currency which you have exchanged. This is the taxable value. Where for some currency, if RBI rate is not available, you can take 1% of the INR received paid. If the currencies exchange are not in INR, then lesser of the two amounts that would have been received by converting the value into INR. So these are the methods by which you can find out the taxable value. This is option 1. Option 2 is they have given a slab. What is a slab? Up to first 1 lakh of the currency which you have got as exchange, you take 1% or 250, whichever is higher. Then beyond 1 lakh, that is for 1 lakh, now this 1% will be freeze. So it will come to 1000 for 1 lakh. Then for next 9 lakhs, it is 0.5. Now again, up to 10 lakhs, this is freeze 1000 for first 1 lakh, and for remaining 9 lakhs, it is 0.5. So it is 4500. So total is 5500. So this 5500 is freeze plus on the value above 10 lakhs, you take 0.1% and the total maximum is 60,000. So this is the second method given for valuation. So this is how you value purchase sale of foreign currency service. Next is just a minute. Where you are booking tickets through air travel agents. Now, when air travel agents are booking your tickets, what is the value? The value is 5% of the basic fare for domestic bookings. And if it is international booking, 10% of the basic fare. So this is assumed to be the air travel agent's commission. So that is considered as a taxable value for the air travel agent's commission. In case of life insurance, now this will not be useful whenever it is a life insurance given issued after 22nd of September. But for old cases, what is the value, taxable value in case of life insurance? Now, first possibility is whether it is a term plan or it is a endowment policy. If it is a term plan, then entire value term plan is what is the value of your entire premium is your taxable value, because in case of term plan, there is no investment done. So whatever is the amount of premium, that entire amount is taxable value. However, if it is not a term plan, it is endowment policy, then the first possibility is, are you intimated the amount that will be invested by the insurance company? If yes, then simply gross premium minus this amount which will be invested. The difference is the taxable value. However, many times this amount is not intimated, then you have to assume what? If it is a single premium policy, you have to assume taxable value is 10% of the single premium. If it is a multiple every year premium you have to pay, then for first year you have to assume 25% of premium is the taxable value, and for all subsequent years you have to assume 12.5% is the taxable value. Next, a dealer who is dealing in the purchasing and selling of second-hand goods. Best example is motor car dealers. So we have many motor car dealers who are only into refurbished cars, you have these laptop, mobile phone dealers. So for them, the taxable value is their margin. How do you find out the margin? The selling price minus the buying price. On this margin, they have to pay the GST at the rates applicable. Next, coupon or voucher is equal to value of supplies redeemed against the coupon and voucher. Now, anyways, I've said that the coupon voucher point will be deleted, so this also will automatically get deleted. Next, notified service between the distinct person without consideration. The value is nil if IT is available. We have to read this above. Next is where you are acting as a pure agent. Now, the rule is if you are acting as a pure agent, whatever you are charging or recovering from your recipient as a pure agent, that will be excluded. That is, there is no GST on that amount. But the question is, what is a pure agent? Or when we will say that you have recovered any amount as a pure agent. So for this, there are some conditions. First, there has to be a pre-agreement which empowers where the seller has to pay the amount. 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 The seller has to pay the am recipient has empowered the supplier to act as a pure agent. What is acting as a pure agent? Where the recipient allows the supplier, or we will say authorizes the supplier to procure any goods, procure any services on behalf of the recipient, which will be used by the supplier in providing his output service to the recipient. And the invoice for these goods or services is always taken in the name of the recipient. Those prices or those supplies are pure agent supplies, which will not be included in taxable value. Next, Rule 34 deals with what? Rate of exchange for determining value. Now, when this will be required? Whenever we are talking about import of goods or service where the original transaction value is in foreign currency. In such cases, for import of goods, what will be the rate of exchange? It is the rate as notified by the CBIC. Now, this is coming from the Customs Act because for import of goods, Section 5(1) proviso of the IGST Act says you have to follow as per the customs law. So, the rate of exchange notified by CBIC will be taken. However, if it is import of service where you pay tax as per the GST provisions, in such case, you have to follow the generally accepted accounting policies. And as per your accounting policies, whatever is the date of recording that import of service in your books, you take that day's market exchange rate, average market exchange rate, and that becomes the rate of exchange. And then Rule 35 says it will always be assumed that your value is inclusive of taxes. So wherever you are not showing GST separately on your invoice, the tax will be calculated by making a back calculation because we will assume that whatever is the value you are recovering from the buyer, that is including GST. So students, this is the entire chapter on valuation. Now I open the forum for your queries and doubts. You have asked few in between the class, but still, if there are any further questions on any of the topics that we have discussed in past two sessions, you can ask me that. Khalid is asking rule 28.5, please repeat once. If you're asking this point, I assume point 5 is this. So, beta, what is this point? See, whenever I'm supplying to my distinct person or my related person, and the person to whom I am supplying is eligible for full ITC. So, let us say I'm supplying, you are my related person, and I'm selling you cloth. And whatever GST is applicable on the cloth which I'm supplying to you, you will get full ITC. In simple words, your ITC on those items is not blocked or is not restricted. That is where this last point will come. In such case, whatever price I'm charging on invoice, that will be taken as the taxable value. In short, valuation rule will not apply in scenario where even though you are my related person, but you are eligible for full ITC. In that case, whatever 1 rupee also or 2 rupees also or 5 rupees also if I charge for those goods or service, that will be taxable value. That is what is the meaning of this point, beta. Is this understood? Excellent. So students, this is the three topics which were allotted for today's revision. Now I'll request that you have a weekend. Yes, it is a festival weekend, but still, as I mentioned at the start, we need to be also focused and be on track with our career goals, professional goals. So I'll request that you please solve your module and past MTPs, RTPs, which are available on our BOS portal for all these chapters, so that by chance you find difficulty in applying these provisions in any of the MTP, RTP case studies or problems, I'll be definitely happy to solve your queries and doubts. Please take that effort so that anything relating to these 6 chapters which we have discussed till now will be fully completed by the next topic, by the next lecture. So students, with this, I sign off. I wish you the most happiest and the most blissful festival season greetings. And I'm sure that you all will come out victorious, as I think Swaminathan had mentioned at the start. So I wish, I bless that you all be successful in your life and you all be the best of yourself in your personal life, in your professional life. Thank you. And that's all from my side. Good night to everyone and wishing you all a very, very happy Diwali. Yes, sir. Wishing you happy Diwali, Manishji.
Happy
Thank you,
Diwali.
Manish. Thank you all. Good night.